want to bring in the Wall Street Journal's chief economics correspondent right now, John Hilsenrath, looking at oil and the economy. John, good to see you, sir.
Good to be here.
What do you think's behind this move in oil, and does it continue?
Well, as you mentioned, we've got supply disruptions, which I think are causing the temporary move. We've had these fires in Canada, which are slowing down production. We also have events in Nigeria. You know, when you look at the global economy and the kind of pace that we're getting at of growth, you know, I don't think this is a major turnaround. I think we've got oil in a range now. Maybe we're getting towards the top of it.
Maybe, but Kevin, you got to be impressed by this move right here in oil. And you know, Dagan, for the whole year we've been talking about how oil is so connected to stocks.
Right.
So does this mean a turning point for stocks? I mean, obviously, we all want to know that. It's a $1 million question.
Right. I know
you don't have the answer.
No, we're getting consumer prices out later today, and inflation, John, is expected to pick up enough that the Federal Reserve might move next month.
Well, you know, we have to watch that. The Fed's going to have a hard time moving in June, but you know, there's a lot of Fed speakers coming out the last few days and coming out in the next few days, and I think the message we're going to be hearing from them is they want to remind the market that a rate increase is still on the table this summer. So if not June, there's still July and September. They've penciled in 2 this year. And then, because, you know, the markets aren't really pricing this. They see just a 20% probability of a move by September. Fed officials want to remind people that, hey, this could come. Don't be surprised by it.
The inflation's expected. The CPI out at 8.30, up 0.2% is what we're expecting. That would be a big story if the Fed if the expectations turn that the Fed is going to start raising rates, Kevin.
Well, yeah, I don't think right now, if you look at the Fed funds future market, I mean, nobody's really pricing in a rate hike in June, and I don't think the Fed wants to become politicized, especially with upcoming conventions. But you certainly have some governors talking about raising even 2 times this year, which is still kind of keeping the market at bay. But I think the important thing when it comes to oil is that this actually helps companies over the next quarter because they can sell barrels out into the future 3-4 months at around $55 a barrel. They've really cut down costs. But what's going to happen is you're going to see a lot of capacity come back online at these prices. That's why there still is an overhang. So seeing $50 a barrel, we may not see it in the near future.
John, does it hurt?
Well, and Maria, that's why I'm talking about these markets being in ranges with stocks as well. It's, you know, it's hard to see stocks taking off, especially going into a November election with so much uncertainty around it. You know, I think we're in ranges for a while. I think if the Fed moves, they're going to move very tentatively. It still could be a bit of a surprise for investors because they're not expecting really anything this summer. And if we get decent data, not just the inflation numbers today, but we've got another round of jobs numbers before this this June Fed meeting, that could get them moving towards doing something maybe in July or September.
John, we talked about retail sales last week. It was before the number came out on Friday. Much better than expected. Strong on online. With the move up in oil prices, does that change at least some of the strength? I mean, we obviously didn't see it in the department stores last week, but does that change some of the strength that we've seen in buying potential?
Well, you know, I mean, the ironic thing here, Dagan, is that when oil prices fell and gasoline prices fell, people were saying, well, why aren't consumers spending all this windfall that they've got? So maybe they're not as sensitive in their day-to-day spending decisions on this. But that retail sales report was good news, and I think what it showed us is that there is consumer spending going on. It's just not showing up at the traditional retail outlets. It's showing up online. It's showing up at restaurants. You know, it's showing up where basically not in malls.
Yeah, real quick, here's Kevin.
Yeah, John, I mean, we obviously have the economic data in the U.S. to back up another Fed rate hike. And what is the big difference raising it another 25 basis points, especially if they forecasted it? But one of the issues is that the Fed keeps talking about international markets, and you're seeing that come through on the transcripts. Can we actually raise rates when the Fed is so focused on the international and global markets and the currency overhangs?
Well, that's certainly an issue that's giving them pause, and it's much more present in their minds now than it was a year, 2, 3 years ago. You know, right now the other central banks are kind of on hold mode, but what you have to watch is what's going on in China. Their currency is starting to weaken again. There are going to be worries about capital outflows there, and that's a big issue. That's a big issue for the Fed, and we see when the Fed getting towards these inflection points, we see a lot of movement in Chinese markets, and that's something that they're going to be watching very carefully. Absolutely.
They're watching currencies for sure. But today's story, you got to say, is Home Depot. Raising its guidance, strong numbers, stock is on fire in the pre-market. That's going to set the tone for sure. John, good to see you as always.
Okay, thanks a lot.
We'll see. Did you want to jump? Go ahead. What was your
well,
final
I just
thought
wanted
there?
to say on Home Depot, that's another case where you can't order a lot of these home goods online, so that's another retailer that's going to do well at a moment when consumer spending is picking up a little bit.
Yeah, that's good. Good news there. John Hilsenrath, we'll see you soon.